Hey everyone, welcome back to Chip Stock Investor. It's Nick and Kasey again. Recently on a live event over on our Discord server, we reviewed some of our small cap basket stocks, and we'll present them to you now here as our mid-year review, see how they did, see if we're going to keep them around, and what is the potential for some of these companies. What are we looking for? We'll start this discussion off by looking at our favorite chart, the semiconductor industry flow chart. We're going to be talking about these parts of the supply chain today. Integrated device manufacturers, you'll see some companies that fall into the chip fabs and contract manufacturers, some fabless design companies, as well as some enterprise and consumer software.
I don't think we need to review it too much. It burns brightly in everybody's minds what transpired the first half of 2025. It was pretty wild. Through March and April 8th was kind of the bottom. The S&P 500 was down just over 20% from peak to trough. Even more, obviously, for the NASDAQ and tech stocks in general. Massive amount of uncertainty. Then we got the tariff pause. Everything rallied in pretty grand fashion, and now we're back to all-time highs again.
So during all of this, I think even throughout March, April, May, we talked about the semi industry that it was going to heat back up in the second half of the year because AI, or accelerated computing, was pulling everything along. But during all of this, industrial, automotive, power were having a very severe prolonged downturn, but they're finally coming out of those end market sales declines.
Okay, so here's that U-shaped recovery chart. This thing has been shared now for last year. The U-shaped recovery just kept getting delayed. I think maybe we originally made this chart at the end of 2023 when there was originally the start of the downturn in auto industrial power, just to illustrate what we thought was going to happen sometime in 2024. Anyways, we're finally here. The U-shaped recovery appears it's finally here. And the reason we felt confident that this was still going to happen, even in the midst of the tariff turmoil from Liberation Day, was because end market customer inventories, especially in auto industrial power, as well as enterprise computing and some other markets, excluding accelerated computing, had finally reached a level at which they needed to start buying chips again. Geopolitical uncertainty or not, if you don't have enough inventory to make equipment, the economy is not going to completely come to a screeching halt. They're going to have to start making purchases at some point this year. And that's exactly what has happened. So the tariff situation obviously still represents an overhang of risk at this point. Next week, we may get some more volatility due to that as the tariff pause deadline comes to an end. Remains to be seen how that'll all play out. But for sure, the demand environment is much healthier for a lot of these semiconductor end markets than they have been, in some cases, 2+ years. It's been a rough go for a lot of semiconductor businesses, which is funny. It's been masked by the accelerated computing and AI thing, NVIDIA's party. It's been a long time coming, and only select companies kind of participated in the early part of the bull market. But that's kind of how new bull markets always start. There's always early leaders that emerge that pull the market along, and it takes some time for a lot of the laggards and the economy overall to catch up. Without further ado, let's review some of the portfolio changes, Kasey, that you outlined at the beginning, some of the IDM companies, some manufacturing, and then we'll move into other parts of the electronics and software supply chain.
Our investment style, as many of you may know already, calls for about 24 or more small bets. Higher risk, but higher potential reward for some of these companies. So we're going to start with the auto and industrial power and sensor basket because the holdings that we had in this small bets department was getting depleted. So we needed to add some positions. And the reason we try to keep 12 or more of these is we want to generate long-term returns well in excess of the market by finding future industry leaders. But when investing in small bets, you have to have enough positions so that those statistics actually work in your favor and not against you.
Yeah, that's right. Because most small cap companies will underperform the market over the long term or for very long stretches of time. It's just a statistical fact. Most of them will underperform. You got to diversify and pull weeds on occasion. The top three on this list, onsemi, microchip, and then monolithic power systems, MPWR, or how they stylize their logo, MPS. Onsemi and monolithic power we added to in April. Microchip we just kind of left as is. And those aren't small bets. Those positions now, including monolithic power, are obviously not small companies, and they're not small bets by our measure. Typically, a small bet is well under 1% of our portfolio when we start acquiring it. But we thought we'd mention it because onsemi and monolithic power in particular were some of the larger purchases we made, especially through those first couple weeks of April. But then on the bottom, there's where we started to retool and revamp our small bets portion of our portfolio.
Out of these, we first bought enovix, quantumscape. We recently added ouster. And then,
which is up 80% since then.
Yeah.
Ridiculous.
QuantumScape is up quite a lot.
They've worked out.
Aspen aerogels we got rid of.
It didn't make it to our 2 years before deciding. Things really deteriorated quickly. And so Aspen aerogels, we still have that up on the server, and we have a video from last year on it as well, explaining what aerogels are. Essentially, this was a small bet on electric vehicle batteries, as well as insulation for the natural gas industry. But the story around EVs obviously deteriorated quickly, and so we wanted to kind of retool. That's where enovix and QuantumScape came in. What's with the question marks on wolfspeed? We buying that one, Kasey? Seems like there's some excitement now that it's a penny stock.
We've talked a lot about wolfspeed the last almost 3 years, 2.5 years, I think. It's our first video. Now that they're going through Chapter 11 bankruptcy and restructuring that debt, it could potentially be interesting. We'll have to see how the dust settles before we add this one.
The reason why we're not buying yet is because before they emerge from Chapter 11 bankruptcy, there's still uncertainty about how it's all going to work out. They need to agree with their creditors, the biggest being Apollo Group and Renaissance. They need to come to a final decision on exactly what is going to happen, and we need to see what kind of equity is left over for the new stock that emerges from this. So that's why we're waiting. It's going to be highly volatile as they go through the Chapter 11 process. But here within the next couple of months, maybe 3 months, it looks like they do have an accelerated timeline to get this done and taken care of. We should have some clarity. But we like the commentary from new management, the scaled back plans for their fabs, and it looks like it could be an actually cash flow positive business when they emerge later this summer. So stay tuned.
Let's move on to our fab equipment providers. We added more to our Onto position, and we added Nova and Camtech.
This week, we added to Onto Innovation again. They announced another acquisition, which we really like because their cash on their balance sheet had reached 20% of the market cap. So for a very small business like this, a small aspirational, potentially return to high growth business, that's too much cash. They have a plan to grow. So let's get some of the cash used up. Because even after the 2 acquisitions they made in the fourth quarter of 2024, they still had a lot left over. So they announced this week total consideration just over $500 million for Semilab International, a small privately held company based out of Hungary, mostly cash, just over $400 million in cash, a little bit of Onto stock issued to keep probably engineering talent staying put so that they're part of the new Onto team. We like this. Lots of consolidation happening in the metrology and PDC space. Also posted in the miscellaneous channel about a company in the UK getting taken private by KKR that also participates in metrology and PDC. Good stuff happening here. Onto has done a lot of work to help consolidate a little bit of that market to itself using its exceptional balance sheet. Nova actually did some consolidation of its own, also made some acquisitions. So both of those we started purchasing in March. That's our small basket bet on fab equipment, specifically in the metrology and PDC sub-industry. And of course, those are in addition to KLA Core, part of the Fab 5.
And we had previously sold out of our air position, but re-added back again.
Yeah, that was just for tax loss harvesting purposes. Same with Axcelis, sold for tax loss harvesting. Haven't added back to that yet, but I think our rationale was, you know what, we think there's going to be some general correlation here between the two companies. Let's just start with Air. And then, of course, Air has its earnings update next week, next Tuesday, which is going to be a big, important one because it's the end of their fiscal year, which means they'll give us an update on what to expect for the new 2026 fiscal year that ends next May. So we expect that to be an important update, one that probably starts moving assumptions around.
Right. And then BE Semi, we Kokusai Electric, we're satisfied to own a positions in a roundabout way with Applied Materials.
Yeah, one of our two first stocks. We have another one of those later on we'll talk about, but yeah, Applied Materials has the big equity stake in BE Semi, Bessie, and Kokusai Electric. I think a lot of investors maybe just write that off as not meaningful or important, but it's an important aspect of Applied Materials investment thesis. So we add those on there just to point out the fact that you get equity exposure via Applied Materials to companies like that, plus that new battery manufacturing equipment startup that Applied spun out the first half of this year as well.
All right, let's move on to our Fabless chip design small bets basket. Lattice Semiconductor, Silicon Motion, Universal Display, we've owned all of those for quite a while now. Allegro Microsystems was a newer ad.
Late last year.
And then Credo was a recent addition.
Yep. I also added to Credo in May timeframe, and it's done well so far. Catch that update that we did on Credo, Astera Labs, Marvell, and of course, the big one among that group of competitors, Broadcom, from last month. But exited Marvell last year, finished exiting it during the unsustainable run-up in the stock price. The stock crashed back down to reality. We called it out as probably a great purchase during the downturn in April and May. But instead of just adding Marvell, we felt like there's going to be some redundancy there because we already own Broadcom. Let's maybe just add in a small cap or a smaller cap in that particular networking chip design market. So that's where Credo came in. High growth, ultra high growth business. We'll have more updates on them later this year as we get more info from them on what they're up to and which of the data center hyperscalers they are working with and what their buying activity is.
What about Silicon Motion? I feel like that one's been on the chopping block a couple times, but we just keep it.
I think the justification is just always that this company has potential, they do good work, and the stock is just too cheap. We don't want to sell too cheap. That one in particular tied to a pickup in consumer electronics, especially like PC, laptop, because they make the flash memory controllers, high performance flash memory controllers, also doing some new design work for the automotive industry. And of course, trying to get their foot in the door in data center flash controllers as well. So that's why it's just stayed. And I think as much as there's like a temptation there to just finally cut it out of the portfolio, it's actually in the black again. We're up on it from where we initially purchased a couple of years ago. I think it just warrants more patience.
That's a wrap on the mid-year review of some of our semiconductor small cap companies. We have much more than just a dozen companies that we have in our small cap basket. And we have been reviewing them with our semiconductor insiders over on our Discord server. And we're going to continue in coming weeks in our live events. Check it out. Link in the description below. Check out our website, chipstockinvestor.com. You can sign up for our membership there. See y'all soon at Chip Stock Investor.